thank you, Madame Lagarde. As you say, I am here with two hats on. The first is as a journalist. I'm the deputy editor of the Financial Times, but 5 years ago, the FT had the realization that there was a lot of education that was not reaching target audiences through the pages of the FT, and that is foundational financial education for everyone. And we set about trying to make a difference to that mission by founding our own charity, which is called FLIC, the Financial Literacy and Inclusion Campaign. And it's with that hat on that I am also here, and I'm delighted to be joined by such a erudite panel. As Madame Lagarde said, it's unfortunately a truth that is very difficult to deal with, that in Europe, as in so many countries around the world, women are, have lower levels of financial literacy, and I think we can hopefully get to the bottom of some of the reasons why during our discussion today. I'd love to start with Professor Bucher-Koenen. Tell us why this is the case. Have you identified in your research the real reasons?
Well, first of all, thanks a lot for inviting me and speaking about this important topic, because actually what is very interesting about this gender gap is that it's not new. So we've seen it in the data already 20 years ago, and I'm very sad to say that not a lot has happened since. So we've documented the gender gap the first time, I think, with Dutch data in 2005, and then we did it with German data in 2008, and with US data and Swedish data, etc. And the interesting thing is it's always there. And then we compare it across more countries, and what we see is that it's actually also there in countries that are doing really well on other gender equality indices. So there is something that goes beyond just having equality in terms of education or labor market participation. So somehow this is there. And then we started, when we saw this across the world, we started digging a little bit deeper. And we thought, well, maybe it's going to be different if we look at the younger women. And I was very struck that it wasn't. So the gender gap is there among the young and the old. Then we looked into those with higher education, and it was also there. And then we thought maybe it's the experience. So we started looking into financial decision makers. But then if you look into financial decision makers that are women, they're very often single women or single moms. And so it was even worse for them. And so in a way, everything that was found was not very hopeful. And then we started looking into the patterns that we saw when we were measuring financial literacy. And what we found there is that the women did not get the questions wrong, but they all said, I don't know. So whenever they had the opportunity to say don't know in the answer options, they ticked these boxes. And so we wanted to know, is it that they really don't know, or are they just telling us that they know, and when we take away the do not know, they would actually give us the correct answer? And so what we saw, and that was the result that you already alluded to, is that about 30% of this gender gap that we measured was actually explained by a lack of confidence. So women disproportionately said they didn't know, while if they were not given the opportunity to go for the do not know box, they actually got the right answer. And so in the end, the picture is that about 30% is a lack of confidence, but still the rest, so the 70%, are a lack of knowledge. And then we went a step further and said, well, but what explains their behavior in the end? And the answer there was both. So both the knowledge about the financial topics as well as the confidence matter for retirement planning, stock market participation, so all kinds of financial behaviors that you can look at, they are all to some extent explained by these components. And now the big question is, you asked, where does it come from? And so I haven't answered that question yet, because I just said, well, we find the gap everywhere, and we haven't really figured out what to do about it. But in order to understand what we can do about it, we need to understand where it comes from. And now there's research more and more about financial literacy among children and financial socialization. And the interesting thing is, it already starts there. So there's evidence that parents talk more about financial topics with boys as compared to girls. There's evidence that on average, boys get higher pocket money than girls. There's evidence on gift cards for opening trading accounts that are more likely to be given to boys than to girls. And so the question is, why does that happen? And the evidence at the moment points to the direction that a lot is related to role models, expectations, behaviors. And the interesting thing there is that these beliefs are super hard to change. So I think it takes a big effort, a lot of action to finally make progress on that front.
And there may be, along the lines of you're saying there's no difference between different ages. I guess anecdotally, there's even maybe a risk that it's going to get worse, because a lot of the financial information that is put around on social media, whether it be relating to crypto or other kind of money-making schemes, are very kind of male-centered, right? So yeah. It's a fairly intractable issue. Obviously, we're going to try to get to the bottom of ways in which we can tackle it over the next hour. President Nagel, I just wondered, from your perspective in Germany, how do you see this issue as the why it's happening and why it matters to try and close the gap?
Thank you very much. First of all, thank you very much to have again the opportunity to join you here on the panel. And I guess we will discuss what we achieved over the last 12 months. But coming back to your question, some of the arguments that I will use, they were already being said. We have still in our society, and this is also true for Germany, a kind of an inherent unconscious bias when it comes to financial literacy, especially what we can do for girls, what we do maybe more for the boys. But at the end, I believe it's not a women's issue, closing that gender gap in relation to financial literacy. It is something of utmost importance for our whole society. At the end, it is about economic growth, what can we achieve there, what we can do in terms of retirement plans and so on. Also, what we can do for women to become entrepreneurs and things like this. So it's a mix-up of many, many arguments that I believe at the end, the outcome for the whole society is much better in terms of, in the way how we can become better to really improve our society, that this gender gap is really closed. And so I believe, coming back to the core of your question, that my country, Germany, is not so different from all the other countries in Europe.
Well, as we heard from the professor, I think it's a global issue. Maybe there are some bright spots for ways in which countries challenging this intractable problem, but we'll come back to those. I wonder, from the Greek point of view, Governor Stournaras, do you see any bright spots? Are there, in terms of tackling the why and also the why it matters?
Well, thank you very much for the invitation, President. I'm very glad to be with you, especially these days. First of all, in my view, we should reduce the gender gap and the financial literacy gap for 3 reasons. One has to do with civilization. A few days ago, a famous Greek historian passed away. It's Helen Glykagiarveler, who said exactly, to judge the level of civilization of a country, look at the status of women. So it's a question of civilization. The second is a question of fairness and equality. To the extent that, to a large extent, the financial literacy gap is due to the so-called motherhood penalty, we should try to minimize this. And finally, it's a question of efficiency. I mean, biological studies show that talents between boys and girls, women and men are the same distribution. So accepting a gender gap is a waste of resources. So this is why we should try to minimize the gender gap and the financial literacy gap. Now, on Greece, it is the same as in other countries. Perhaps the bigger financial literacy gap is explained by the crisis because of brain drain. Many talented women left. Also, the brain drain and, the crisis left a scar on the welfare state. So the assistance to mothers was less than necessary, but I can report now a lot of progress. We can see it in surveys. We can see it in progress. Also, I can refer to the state taking initiatives to have a national strategy for financial literacy. The Bank of Greece is doing a lot. Actually, we give the best example. 50% of the staff are women, and 50% of the senior management are women. I mean, in the good old days, to be a director of the bank, you ought to be close to 60 and a man. Now you have to be a woman and young.
Well, that's heartening, right? It's a sign of hope there. Just before we move on, in terms of the role that the ECB can play and the EU as a whole, why do you think it's important that, obviously you're doing things at a national level, but the kind of coordination at a Eurozone level, that's
a very good question, because monetary policy is unique in the Eurozone, so we have a unique monetary policy. We have, it's a single decision-making body, so this is not a national issue. It's an issue for the Eurozone as a whole. And we want to have rational people, bounded rationality, as we know, Homo economicus is not Homo sapiens, but we want people with bounded rationality, that they can take rational decisions and they can understand what we're doing. If we do that, then we maximize efficiency, the transmission of monetary policy is more effective, people are taking rational decisions on savings and investment, they understand how inflation is being formed, so we maximize credibility and trust in this way.
Yes.
And by working together, we exchange views, we pool resources, and we maximize the comparative advantage. So this is the benefits of working all together.
Yeah. President Nagel, I'm guessing you'd agree with that sentiment.
Well, absolutely. But I just thought what Yannis said, well, the Governing Council, we are not the perfect example for sure. Yeah? We have 27 people in the Governing Council and only 2 women.
But you're all very financially literate.
We're two very excellent colleagues, but nevertheless, I think this is a good indicator for the whole society. We have to do much more.
Yeah.
We are definitely not there. So for the Bundesbank, I can say, well, the same what my colleague Yannis said for Bank of Greece. We improved a lot over time, but we are not there. So I think that is the reason why it is so important that we have to do that on an annual basis to really find out what can we do on top of that. It's not just about awareness. I think at the end it is about action. So it's not just talking, it's really doing something. And,
yeah. And Madame Lagarde, as we've heard, you know, it is obviously a matter of fairness, but it's also a matter of delivering on the potential of the Eurozone economy. And that applies obviously globally as well, whether it be for entrepreneurship or for savings and investment, which is obviously one of the reasons why you're very interested in this. What do you think you can bring to the table?
Well, I think that we have some really exciting projects that we have to invest in. We have to be far more digital than we are. We have to be more sovereign in our energy mix. We have to look after our security, and all that consumes a lot of financing. Completely legitimate and exciting as a European project. But of course, that financing needs to be mobilized, including here at home. And if instead of saving as much as we do, and we are, after China, I think we are the highest savers, if we invested in those projects, in the financing of those initiatives, I think it would take us a long way into actually delivering on what is expected from us, the Europeans, at least on these 3 accounts. So capital market, I'll call it saving and investment unions, whatever, but that has to move together with the willingness of people to invest in projects that are going to help develop Europe and strengthen Europe. So I'm very positive and enthusiastic about it. And last word, I think that what, together with our leaders, Lydia and Marina, we have launched last year, which national central banks have responded upon. We have now a financial literacy network where each and every national central banks participating in the process is saying, okay, this is what we're doing, this is how it works, this is good, this is not so good. And I think that's a real, as Joachim said, we are doing something, we're not just talking about it.
Yes, absolutely. Well, just to sum up what we've been talking about and to kind of convey this, this hidden gender gap that exists right across Europe, we now have a short video. So if we can hear that, please.
Europe has a hidden gender gap that almost no one is talking about. It's not about pay. It's about financial savvy. And the numbers will seriously shock you. Data shows 1 in 5 Europeans are highly financially literate. But while 27% of men fall into this category, only 15% of women do. Yes, 15%. Think about it. Women usually handle the everyday spending like groceries, but they tend to shy away from the big financial decisions. The gap in financial knowledge didn't just appear overnight. For a long time, women weren't part of the workforce. They weren't in higher education. They were limited to a life at home and kept out of key financial decisions. Because here's the truth. Financial knowledge equals financial well-being. If you're unsure about money, you're far more likely to make choices that come back to bite you. Low financial literacy leaves people wide open to financial shocks and makes them an easier target for frauds and scams. So, how do we actually boost financial savviness across Europe? Well, there is no one-size-fits-all solution. Europe is just far too diverse for that. Every country uses different definitions, benchmarks, and indicators. It's like comparing apples and oranges. Totally pointless. That's exactly why on International Women's Day in 2025, heads of Euro area central banks stepped up. They agreed to deliver on 5 commitments to improve financial literacy. One of these was setting up a dedicated network to drive this effort forward. The network rolled up its sleeves and started building harmonized datasets so countries can finally compare their numbers properly. They dug deep into the data, looked at the gaps and the personal characteristics that matter most to create smart policies that actually support the people. It might seem like a small action, but it's a massive step forward in boosting financial literacy and finally closing the gender gap. So, let's keep the conversation going. Share this video, spark a dialogue, and help us build a more financially confident and equal world.
Well, that was obviously a helpful summary of some of what we've talked about, but it also links us through to the next section of our discussion very neatly. As you alluded to, Madame Lagarde, and as we heard in that video, measurement or a lack of consistency in measurement has been one of the key problems in terms of getting to grips with what's going on. You mentioned the network that has been set up. Could you talk a little bit more about the network and what the network can bring, both on the data side and in other ways?
So the network was one of the 5 objectives that we set for ourselves, and that were agreed by the national central banks a year ago. To this day, and I'm speaking under the control of the excellent team that is leading this exercise, all member states have actually enlisted with the network, and additional to that, we have several consumers agencies which have also registered as part of the network. We have museum visitor centers that specifically belong to the network as well. To do what? Well, first of all, to be part of the network so that they can share with each other, talk to each other, compare notes. Second, to actually identify on the networks, which had a meeting this morning, what they have done, what they're planning on doing, how it's working, what results they can measure. And I think on the issue of measurements and definition of impact, there is work that is ongoing and that will be continued. But that's essentially what is done.
That's helpful, and the perfect link to Professor Bucher-Koenen. What do you see as being the most crucial things that should be measured and to prove what actually works in practice?
So I think to prove what works is actually one of the biggest challenges we have at the moment. And to cite Anna Maria Lusardi, who was here last year, she said that if she would take €1 or $1 for every time somebody asked her what works, yeah, she told the story in the US, so it was not. But let's translate it. So if she would take €1 for every time somebody asks her what works, she would be rich now. And so that really is the biggest question. And I think the challenge here is that we need to agree on a proper documentation of the types of interventions that are offered, because just to give you an example, so they can be small interventions on apps or a leaflet handed out, but they can also be a like full semester course at a university. And at the moment, in the way that research works here is in most models, we just put in a variable measuring whether somebody had an intervention or not. And that's all we do. So it's not about who delivered it. How was it delivered? What was the content? How long did it take? And so in order to understand what works, we need to understand much more what exactly it is that we're providing. And then in the end, it's also the measurement, the outcome. Is it that we care about the knowledge? Do we care about confidence? Do we care about decisions? If yes, which decisions? Do we care about financial well-being? That's a very big word, but I really have not fully grasped myself how we would measure financial well-being, because it's also hugely subjective. And so I think we need to have a framework and a standard for really making progress, because only if we have that, we can answer the €1,000,000 question of what works, for whom, and in which context, and why.
Yeah, big questions, absolutely. What about anchoring it in initiatives that are already happening? So in Germany, I know there has been, was quite an exciting, I think, policy initiative by the last government, which I think is maybe still going to happen, but is maybe been stalled by a few other policy priorities over the past year or so. But tell us a little bit about the German context and, what experience has shown.
Well, I'm not sure if there is this special German context. I think at the end, when it comes to what we are discussing here on stage, I believe it is of utmost importance to have the right tone from the top. In that regard, I believe bottom up, yes, is also very necessary, but at the end it is a kind of a management decision that has to be taken by politics, how serious you are with this topic. And so I believe we need guidance and orientation. So you already alluded to it. We are living in very complicated times, and often when you are in such a phase, things are being, let me say, they're losing a little bit traction. And this is my concern that I have, that we are losing the focus that is necessary when we would like to achieve something in this regard. And so I believe we should maybe become more outspoken on this, despite all of these difficulties. You already said at your introductory statement, Christine, what happened over the past 2 days. We shouldn't forget about the women in Iran and things like that. So we should keep, let me say, the pace in a way, and not being distracted by many other things that are going around us. And that is what I expect from politics. And I hope that Germany can follow this path over the next couple of years. Yeah? And my institution, we are doing a lot. And the reason why I'm grateful for our network, I think central banking, to a certain extent, is family business. And so we can give a little bit attention to that important topic in the way we are being perceived in the public. And so I believe that it is so important that, Christine, that you put that topic so high on your agenda. Thank you very much.
But I think you're absolutely right that you can do a lot as central bankers, but there's only so much that you can do without political support. So it sounds like there's a little bit of frustration that's not forthcoming.
I'm not sure. I think we are used to frustrations when you're a central banker. So we are experts on this. But nevertheless, what I would like to say is that politics, I believe, I can say it for Germany, they have a good understanding how important this topic is for the whole society. And we have many good economic arguments why it is important, and I already said it, for the whole society. And so I believe that we on the central banking side, we should address this issue. We are not doing this once a year. I think this is one of the things we are doing over the year, giving advice also in this regard, how important it is to work on financial literacy, not only for women, for the whole society. And I guess we are doing a lot here.
And in the German context, sorry, just one quick follow-up.
You're coming back to this.
You have, no, but you've got an added complication, if you like, because the kind of independence of the lender makes it harder to kind of coordinate at the federal level, I suppose.
I cannot disagree.
No.
That makes it definitely not easier. We have 16 states.
Yeah.
And so not in every state financial literacy has this level, let me say, where I would like to see that financial literacy should be when it comes to education.
Yeah.
I said it last year, and I'm still convinced by this argument. Yeah. We should start with financial literacy at a very early age. It is the best you start something new when you're young. Yeah. When you're getting older, things are getting more complicated for yourself. So your learning capacities are distracted by so many other things. So there's still a lot we can do. And so the Bundesbank, we are doing a lot when it comes to the education for really young ages, but it is not, we are not perfect.
I'm sure the professor will correct me if I'm wrong, but I think research has shown that money habits for life are formed by the age of 7. So it's quite extraordinary. In Greece, there have been various, and I should say before moving on from Germany, actually, I'm going tomorrow to Munich to meet someone who runs a charitable financial literacy initiative there, partly to see if the FT can collaborate effectively with them. But I know there are lots of interesting things going on at grassroots level.
So Munich, and where you're going tomorrow, I think taking that as an anecdotal evidence that you will see tomorrow, I think it is important in that regard also to crowd in private initiatives, private capital, family offices.
Yeah.
They would love to do a lot more in that area. It's not just investing money, it's also coming with maybe you have a kind of a mission for the whole society. And so we should put that more in the front and say, well, look, there's a lot you can do with your extra money.
Yes.
I think this is an investment for the whole society.
Yeah, no, I think it's a really good point. And Governor Stournaras, that's something that is done in Greece as well, right? The kind of collaborative initiatives between, I don't know, community organizations and government-related entities, I think.
Two-pronged policy. First of all, we have a national strategy led by the Ministry of Finance. We are active as consultants, not only us, the Capital Markets Committee, public institutions, private sector stakeholders. So I think we have achieved a harmonized approach. We have a roadmap for financial literacy now. Also, the Bank of Greece itself has taken many initiatives, as I said before. A lot of research with academics on financial literacy, on the effects, on the causes, many publications, collaboration with stakeholders to produce simple books for secondary education. Actually, we convinced, I was very active here to convince the government to introduce a course on economics in secondary education, I think it is critical to bring that early, especially for girls, because if you give equal opportunities to boys and girls early on in education, you're going to have results, especially for poorer families, because there is a lot of interaction between the children and the parents at home then. But this is not all. Actually, there is also programs for the unemployed, for low-income people, for vulnerable women. I mean, our museum, we call it Civilization Center in the Bank of Greece. We have many exhibitions. We had an open day for migrant women. We're trying to integrate them. As you know from sociological studies, it's extremely important for migrant women to be integrated in the societies they live in. So I would say, all in all, we're doing a good job, and I think we can do even better.
Okay. And all that is shared on the financial network. That's the beauty of it.
Yes, exactly.
Yes. Yeah. So that, and what would you love to see in terms of that network concretely delivering from the point of view of Greece before the next?
I will come now to the issue of measurement, because the name of the pudding is in the eating, as you say in your country. So next year that we should establish metrics, and I mean, this is one of the big tasks of the Eurosystem financial literacy network. I can throw an idea on the table, for instance. In consumer surveys, we know now that the perceptions of inflation differ between men, women, different classes in society. And that differs from actual inflation. Why? Because people have different perceptions. We know the inflation of the poor and the expectations of the inflation of the poor is higher than our forecasts. Why is that? So I think if we measure that the difference is shrinking, I think we have achieved something.
That would be a concrete measurement to look at, yeah.
To be practical.
Okay, very good. Yeah. We have another chance to look back at what we've been discussing here in terms of what works, what has been achieved so far, in the words of the governors. Here's another video for you.
Our goal is to empower everybody to make informed and confident choices.
Central banks and their leadership have a responsibility to recognize and champion the importance of financial literacy awareness.
Progress in financial literacy and gender equality.
It's essential to empower women,
to reduce inequalities,
and guaranteeing equal access to knowledge,
and building people better understanding of their finance.
It's very crucial to have a network in order to be more successful in our policies.
Bring together all the creativity and power.
Collective ambition.
Share knowledge. Joint action.
Education is the compass, but consumer protection is the shield.
Clear, fair and transparent information.
When financial choices are made.
Knowledge improvement initiatives.
Better informed consumers.
Good harmonized data is vital for assessing financial literacy.
It allows us to measure what actions are most effective and to share those best practices across the network.
Help us design programs that speak to people's actual needs, not assumptions.
Which in turn enables better policy decision making.
The sooner the better. And this is very true.
But especially when you are starting your independent life.
Part of the fixed curriculum of schools.
Better decisions throughout their lives.
We strengthen long-term financial resilience.
Acknowledging the problem is the first step. The next is to develop a clear and effective strategy to address it.
Now we've come to the fun bit of the discussion, which is the launch of an exciting initiative by the ECB, EuroSteps, which is a a walking challenge, Madame Lagarde. Tell us about it.
Yes, that's an exciting challenge. So, at some stage you will see on screen proper identification as to how you can actually connect with an application called Walk 15. Walk 15. The trick of this, I'm going to just explain a little bit because I think the video will do a much better job than me. You can register as of now. Okay, you have...
See your QR code here.
Okay, anyway, you can register as of now, and all the steps that you walk in your individual capacity will actually count to aggregate all the steps walked by all those who register in your country. That's point number one. Point number two, as you have registered, you will be receiving twice a week a little push that will explain to you something financial. Interest rates, variable, fixed, bond versus securities, how to organize a balance sheet, all sorts of financial information explained in very clear terms, explained in a user-friendly fashion by our teams. And at the end of the month of April, number one, you will have received all those little videos and information along the lines of what I just said. And also, we will stop the clock of you walking, and the steps will be aggregated, and with a very nice per capita, per population weighted methodology, which I'm told is absolutely above board, a country will be designated as the winner. There will be prizes. Some of them are volunteered by national central banks. Some of them will come from the ECB in order to encourage all of you and as many of you as possible around you. So please pass on the word, Walk 15, so that we can actually send out and push as much as we can of financial information in order to make all of us more financially literate, but particularly women who have this gap that we want to close. So I guess you can now... Yeah, it is available. You can all register now. All our panel members have done it. Yes, go ahead.
No pressure, no pressure. Just before you leave the room, you're going to have to download it, because otherwise they won't let you out. And I presume you're going to encourage highly competitive behaviour between all the governors on the on the committee, yes. And award maybe a prize to the winner. So from the point of view of Greece, what participation are you hoping for in this kind of initiative, and what does it deliver? Because I guess it could be the kind of thing that embeds habit in people going forward.
I think that for such an initiative, participation and inclusion must be built into the design from the outset and have the following characteristics. I have put them down. First, accessibility. Accessibility that is clear and simple language. Availability in all official languages, actually. Designed for users with different levels of skills. Second, relevance to everyday reality matters. Financial education is more effective when it addresses practical issues faced by people, and particularly women, such as budgeting, savings, mortgages, and also understanding inflation and digital fraud. Third, I would say interactive technologies, including animation, games, digital platforms, can engage younger generations. And finally, feedback mechanisms. I mean, participation is not a one way. We need to be listening, to be reacting, and to be adapting. I mean, in the Bank of Greece, we plan many games, animations. We cooperate with influencers that can appeal to mothers, to women, to vulnerable groups. So we're trying to be the best.
Yeah.
Yes.
Very good. And I know Professor Bucher-Koenen, you're leading by example because you've already downloaded the app, and I think you've already got 1,500 steps.
Yes.
Is that not right? Yeah.
I've been walking around the building a lot today.
Yeah, very impressive. Very impressive. President Nagel, I'm assuming you'd agree with the Greek example, but what else does the EuroSteps signify for you?
Well, I think from time to time, I guess we are all kids, and this gamification, I think this is a very helpful tool to learn things. We are using similar tools in our money museum that we have here in Frankfurt, and we know it from our visitors that they are really happy when they're doing these games. And when you do games like this, you learn a lot. And I think we should use all what is available in terms of digitalized solutions, how to get there. And so I'm keen to learn what I will see in that way to put our joint interest here forward. And so we should use, and this is what I would like to say, we should use all the instruments that are available, all the measures. And it was already been said by Yannis when he answered this question about what is the relevance for monetary policy. I think we all know everything is better when it comes to monetary policy transmission when we have more, when the audience is much more skillful. It's about trust at the end. Yes. And so if you have when you have more people that are literate in a way, and this is not only true for women, it's the same for men, then our monetary policy transmission is a much better one.
Yes.
There are so many research pieces about this, and this is common knowledge now.
Yes.
But if I may say, I think everybody stands to benefit. Yes. Because Yannis, Joachim identified the better measuring expectations, better understanding how inflation expectations is formed, and a better literacy about it. But when you talk about measuring the impact, we really have to understand that it's a multifaceted project. If you look around, I was a bit shocked, but then you're right. You talked about the motherhood penalty. And that motherhood penalty, actually, if you associate that with financial illiteracy, you end up with senior women at an old age who have not invested, who have not thought about longer-term plans, and who end up being much poorer pensioners than men. So from their perspective, financial literacy is not about how you form inflation expectations. But if they make progress in financial literacy, and if they appreciate that investing at the age of 25 or 30 is going to actually help them carry through those years, which in some instances are compensated and helped out with welfare, as we do, for instance, in the ECB, they will be better off at the end of their life. And there are multiple situations. When you think about domestic violence, which affects many more women than men, if you combine being a victim of domestic violence and being financially illiterate, the concept of independence, the capacity to push the door and get out and leave, is completely different. Yes. Whether you have invested, you have a buffer, as you call them, or whether you don't. So it serves many, many purposes. That's what I wanted to say.
Yeah,
Sorry, I cut you off. You were going to ask Professor something.
No, not at all. I think we're kind of at the point where you're going to introduce the sum up video. Unless you want. I can do that if you would like me to. Yeah, it's just as usual, a little video to sum up this section, which is on the EuroSteps.
Hello. Would you like to walk the talk and learn about financial literacy? We women, unfortunately, do not know enough about finance. And what I would like to encourage you to do is to learn more and to be more knowledgeable. There's a gap between women financial literacy and men financial literacy. Let's close it. So if you register on the app that we have put together, you will be receiving, during the month of April, a little reminder asking you whether you want to be more knowledgeable about interest rates, about loans, about securities, about bonds, about balance sheets, all these things that sometimes seem a little bit obscure. I really encourage you to do that. It's well done and it's fun. Now, what could be even more fun is if you actually walk the talk. So we are throwing a walking challenge at each and every one of you registering on the app. Every step that you're going to walk from April the 1st until April the 30th will count and will be aggregated on a per country basis. We will see which country actually win and which one of you will be picked randomly to earn a special prize. Over to you. As of the 1st of April, it's on.